as you guys are navigating your 842 implementation journey, I'm sure there's specific questions that you may have based on the level of readiness of where you guys are right now. So again, I want to make this super collaborative. If you guys have questions, feel free at any point in time to kind of steer me in the direction that you want, because I want this to be beneficial for you the most. Just to give you guys a little background on me, because you haven't worked with me yet. I started my career at PwC on the audit side, then transitioned into a consulting role where I helped mostly with technical accounting, helping customers navigate implementations like 606, 842, of course, and then also helped with complex transactions, mergers and acquisitions, all of that fun stuff. Anything with a really beefy accounting guide is usually where I would spend a lot of my time. But I also have found that I get the most joy out of bringing in technical accounting with streamlining monthly close processes. That setting finance teams up for success is really what makes me happy. Of course, reading guidance is always fun, but that's what makes me tick. In my role here at Occupier, I'm the VP of Finance. I'm heavily involved in the lease accounting product, from everything from sales, marketing, product design, making sure everything works in accordance with the standard, really everything that drives that product I have a hand in. And with that, I've also gone through my share of 842 implementations. And so I have felt the pain that you have felt or are about to feel, depending on where you guys are in your implementation journey. And so I'm really looking forward to learning a little bit more about that. This is what I have on the agenda for today. Again, we can make this as collaborative as you want. I was planning to go through kind of setting the stage where we found common implementation pitfalls to occur and how you can navigate around those areas. We can go into reviewing lease accounting, the product itself, and then last but not least, going through a Q&A if you guys are having any questions on anything I discussed, or specific questions on how 842 applies to you guys. More than happy to answer that. So what we've found in our customers for their pains for 842 is, I mean, first and foremost, lack of centralized lease data. I mean, you guys are in a much better place because you have, as you mentioned, a real estate portfolio at least set up, but there's still these other departments that need to be corralled with to figure out if there's lease information. And so I'm not kidding you, one of our customers onboarded with us recently had leases thumbtacked to the wall. So not very accessible for anyone else in the organization to figure out what's included in that lease, let alone being able to account for it. And so being able to access information that you need to perform your role and making sure that everyone is collaborating under the same data. The real estate teams and finance teams are all using the same information is, I think, super, super important. Where I've failed before is on team alignment, where making sure that not understanding all of the roles in the life cycle properly and what they needed from the information, and just assuming that, hey, finance is the top of the house and I'm going to do whatever I want, not bringing in other departments like real estate, legal, corporate, IT, manufacturing into these decision-making processes has definitely tripped me up in the past, especially as I've gone to implement software and they haven't had buy-in. That can be difficult. And then, of course, hey, this is a new standard. You're going to have to learn the standard and then understand how it applies to your business. Some things that people often spend a lot of time on is incremental borrowing rates, figuring out which practical expedients they want to elect. But there's a lot in there. And last but not least, creating sustainable processes. They say that 842 is a race to the starting line, that really you're doing a lot of work here to get ready for 842, but really where they're going gets tough is maintaining that compliance with 842, because there's going to be modifications, there's going to be changes in assumptions, you're going to have to do modification journal entries, maybe impairments, and there's a lot of things to keep in motion with that. I thought it was interesting because we did this slide kind of on our own from polling customers, and then we saw Deloitte felt the same way about it. We're collecting all of that data, to Desiree's point earlier, especially with like embedded leases, things that don't have lease in the document, but are in fact a right of use, collecting all of that information and storing it in a centralized inventory is definitely one of the biggest challenges. Like, as I mentioned, where I've definitely messed up in the past is not understanding the full life cycle, from transaction management to what the real estate team needs for lease administration, or maybe what the accounts payable team needs in order to make sure that we're processing payments correctly. We're not sending out duplicate payments. We know where the vendor needs to get paid. And then understanding, okay, from the lease accounting perspective, knowing that what my staff accountant needs to perform their job, what a controller needs versus what internal audit may need. And so really understanding who the different players are in that process to help build our implementation plan. When I think about driving a successful implementation, I think understanding the lease lifecycle, like I just mentioned, designating a steering committee for representatives on everyone that's impacted by leases. For instance, you mentioned embedded leases is a pain point right now. Bringing in the legal team. I'm not sure how you guys organize contracts right now, but making sure there's a layer of review on all contracts to make sure that, okay, this does not in fact include a lease. We're going to, make sure that we're reviewing everything, but that's not a lease, so we can move forward. But there's still always going to be a risk if you're not thinking of leases at contract onset, that you're going to be missing leases and always have a risk for embedded leases. Building sustainable processes. This is also from Deloitte, so I can't take all of the credit for it. On average, it takes 4 to 6 months to fully implement 842. Of course, that can change based on the number of leases you have, the current status of your lease portfolio. For instance, in these phases right here, there's, okay, phase 1, assessment, readiness, understanding 842. Phase 2, development of policy. So how, based on your understanding of 842, how is it going to apply to your company? Phase 3 is actually what takes the most amount of time. It's abstracting all the information from leases and storing it in a software like Occupier. And so you guys have a huge head start on that, because your real estate portfolio is, obviously already abstracted. And then, solution implementation, deployment, and aftercare. But all of these usually takes like 4 to 6 months. Again, with this phase 3 being the largest, but hopefully you guys are well ahead of the curve, considering your real estate data is already abstracted. I believe Occupier and a technical accounting resource work really well together, because what Occupier has is it has all of the information that you need to do it, and it has the infrastructure to generate those journal entries. But what a technical accounting person also gives you is some assistance on navigating some of those complex decisions, like how you guys want to select your discount rate, what practical expedience, or maybe you have a really tricky lease like your embedded leases and you want to make sure that you're applying 842 correctly. We're going to give you the framework for any lease, real estate, equipment, embedded, for 842. It's just, you still need someone to make sure that the software is selected based on the right parameters, which sometimes helps to have a technical accounting resource through that. So how familiar are you guys with lease administration? Because how the accounting module works is all of the information, rent schedules, lease commencement date, termination, rent escalations, all of that information feeds into accounting. And that is the crux of where accounting all begins. And so if you are not that familiar with lease admin, we can go through that quickly and then go into accounting just to show you where the information is coming from. And then going forward, the lease commencement date, when you gain possession of the underlying asset, whatever it is, real estate, equipment, the cash truck thing, that would be really important because that starts the date of when you would start putting that right of use asset and lease liability on your balance sheet. So it's a good time, to start thinking about making sure that there's communication lines between real estate and finance or whoever is owning those leases to make sure that you now know with absolute certainty when those dates happen. So I'll go through lease admin quickly. This is a staging environment because we haven't turned on accounting yet, but I can show you kind of how the information flows from lease admin to lease accounting. So this is a individual lease within the portfolio, and it's a digital abstract of all of the information within that lease. Some important things that would be flowing through on the accounting side are lease commencement date here, the financials tab, understand all of the payment types in that lease, if it's base rent or if it's additional rent like CAM, marketing expenses, OPEX, anything like that. You can also look at clauses and critical dates for leases within here. You can assign tasks. So what I was just saying about the possession date being really important for you guys going forward after 1/1/2022 and beyond, you can even set up tasks like, Lauren, please notify when possession of space. So that was due yesterday. Oh shoot, I haven't done that yet. So let me notify the finance team of that to make sure we're all on the same page. And then all of the lease documents are here as well. But how this then transpires into lease accounting is, so right now, this is an incomplete status. That means that the accounting team has done nothing for that lease. And so they would hit get started. And here's what I call the 842 pillars. It's our lease wizard. Each one of these items, each of the 7 buttons here are really important for developing the amortization schedule and journal entries. I'm sure as you're going through 842, a lot of this probably is sounding familiar to you. But first and foremost, lease term. That's important because it also dictates, for instance, the possession date is 1/1/2022. That means my measurement date is 1/1/2022. I have my expiration date. These are grayed out because we want to make sure everyone throughout the organization is using that same data points. And it also, of course, helps save some time. You have the opportunity to review all of the lease payments by period. And you can also remove certain lease payments. So for instance, CAM, trash, internet, and insurance. Oftentimes these are variable expenses and would not be included in the lease liability. So you can remove them and review all of that rent schedule through the end of the lease term. The next page is going to bring in the tenant improvement allowance. And so if you guys are currently amortizing this on your balance sheet today, on day 1, that would be the balance on the balance sheet as of 12/31/2021. And then going forward, if there's any incentive like TIA on real estate or any other types of incentives, it would be included here. Because now we're starting to flex the lease liability and right of use asset based on the tenant improvement allowance.
Can you just quickly, Lauren, tell them what happens for TIA that happened before the transition date?
Yeah, so before that, what are you guys doing right now for a tenant improvement? What you would do in that instance is, I'm assuming on 12/31/21, there's going to be a balance there. So what you would do is just enter in what that balance is, and what the goal of that is. we're setting the stage for the implementation journal entry on 1/1/2022. So we're removing any lease liability related, or sorry, lease account. So deferred rent, tenant improvement allowances, any deferred costs that you may have had to amortize, all of that is getting removed for the right of use asset and lease liability. And this is one of the levers here. Same with deferred costs. Not many people amortize this under 840, but it is possible. And under 842, like initial direct costs or anything like broker commissions that you're paying on executed leases. Things like that's the most common for sure. As I mentioned, deferred rent. This is to remove that 12/31/2021 balance. The next step is selecting your discount rate. And then the last step here is classifying the lease. A lot of times folks know if it's operating or finance, but we have the lease classification criteria here. If you select any one of these as yes, it's automatically going to tell you it's a finance lease. And the last section here is comments. If you want to denote things like why you included a certain discount rate or the term or classification, you can enter in these comments, and this will stay with the record of the measurement through it's helpful for like more of auditing purposes. Through this right now with you guys took a little bit of time, but our customers on average take 1 to 2 minutes. We had a customer a few weeks ago did 130 in like an hour and a half, 130 leases. So once you get the hang of it and understand what it's asking you, you can kind of pump through your leases pretty fast, which is nice. But let's show you the other side now for a completed lease. So this is a lease that's gone through that lease wizard and has also been approved by someone at the organization. So now you're going to see within the measurements tab, the amortization schedule. On the left is the lease liability. On the right is the right of use asset. You're also going to be able to see all of the journal entries at inception and also every month thereafter. You could also export this into Excel, which I love because when you export it into Excel, you're able to see all of the underlying calculations for how the software is working. If you ever had a question on why is the ending balance this, or why is my lease expense this, you can always come back here to leverage this, this tool. This amortization schedule is for each individual asset, but I can show you some reporting that consolidates everything. But if you had particular questions on one asset, or if you're going through an audit and they pick samples, you can actually just give your auditor access to Occupier and they can pull these amortization schedules for their own testing. So I'm going to go to the consolidated view. Here consolidates all of the journal entries that are in that completed state. And you can filter on a ton of things. I think for monthly close, let's say you're trying to close November of 22, I can filter on that. If I wanted to filter on legal entity, I could do that, or on a particular accounting lease. But if I wanted it for the entire portfolio, I could hit submit, and this could be exported into Excel as well. The goal of this is an easy export and import into your ERP because it can be completely configured to fit your financial reporting needs. So for instance, if you use different account code names, if you have different account segments like department, location, project, vendor ID, franchise name, anything like that that you want to make sure you're capturing in your ERP can be configured at that lease level basis. So I'll show you what it looks like. Here's an example here for what the export would look like. Any questions on generating journal entries? Yeah, so it just goes into Excel right now, but we can modify these column headers to fit how QuickBooks takes in the information. Most of the time, our customers have had success importing this into NetSuite and QuickBooks because there aren't any missing data sets or rows. It's usually highly configurable with those types of ERPs. We are looking at, in the future, developing ERP integrations, probably on the back half of next year or early 24. We'll be able to start releasing some of that information to the customers, but right now, this is what we have. Also, to help you with the month-end close process, we go back to November of 2022. Let's say you're trying to close this for Occupier Parent. This is going to give you your trial balance to help reconcile what your ERP is saying versus Occupier to make sure that your right of use asset is reconciled, your lease liability, all of those 842 required accounts, making sure everything was imported into QuickBooks correctly. And last but not least, when the time comes for you guys to go through an audit and generate your financial statements for that, you can, I'm just going to pick 2015 to make it easier. So you can generate your 842 required disclosures by creating the report here. And this is what it would look like. Even though the underlying calculations are relatively straightforward, you still have to compile information from a lot of different sources. So it definitely is a huge benefit to having it all here. Like one of my favorites, I always hated doing the maturity analysis. I don't know why, I just always hated it. So it's nice to have it here.
Okay.
Any other questions on Occupier Accounting, lease administration, what an implementation looks like?